What's up, everyone? It's Caddy with Money Vesting. Welcome on board for yet another week and another market open live stream. So if you guys can see me and hear me, just give me a thumbs up. In the live chat, we should be all set and all good to go. QQQ right now slightly down about 44 basis points, so pulling back slightly down to $328. We've got the SPY down about 70 basis points, pulling back down to 424, and the Dow Jones is also down a little bit over 63 basis points right now, trading as low as $335, primarily because of oil prices selling off pretty aggressively. So we are down almost 5% for crude, trading as low as $87 a barrel. It was trading as low as $86 a barrel. So energy stocks obviously taking a hit on the day so far pre-market. We are seeing a pretty significant and something that we are looking forward to sell off in energy prices right now. So we do have a lot of earnings coming up. Well, today not so much, but this is going to be a retail week where we've got Walmart, we've got Home Depot, we've got Sea Limited, we got Target, Kohl's, BJ's, TJX, all those companies reporting earnings later this week. And we've also got retail sales coming out later this week on Wednesday, and the FOMC meeting minutes, which I forgot to mention in my other update. So there is going to be Fed meeting minutes also released on Wednesday as well. So once again, thank you so much for joining, everyone. Kevin, Nick, Brandon, Ranjit, thank you so much, everybody. Ray, shout out to all of you guys. And Ranjit says, time for some volatility, UVX and VIX spikes. So yeah, we are going to be talking about a cycle chart as well, which is really, really interesting, which is going to be towards the end of this presentation. But right now, we do have the VIX up a little bit over 8%, so it's just back over 21. Again, being a little bit cautious here, we've talked about this risk and reward dynamics and the overbought conditions, and with respect to the volatility as well. So first things first, I do want to give tribute to Rakesh Jhunjhunwala. He is, for those of you who don't know, he was India's quote-unquote Warren Buffett. A great investor in India. He died at the age of 62 over the weekend on Sunday. His net worth was a little bit over $5.5 billion. And yeah, he was a very much respected, very celebrated investor in India. So a little bit of a tragic news there. So he basically said 10 years ago to Reuters, he says, and I quote, "All I've known is trading and investing. I don't want to do anything else in life, and I'll call it quits the day I die." And on Monday, he told CNBC TV 18 that India's economy, Asia's third biggest, was entering a golden age, expressing hope that my fellow Indians are optimistic as I am. So may he rest in peace, and obviously very, very tragic news for India and of course for the investing community as well. So time to go all in. Top investor Paul Meeks shares his and reveals what he's actually buying. So after a massive flight to safety in the first half of the year, so we have seen a little bit more to a risk-averse move in the markets, people kind of going away from riskier assets. Investors are now buying into tech once again. So we have seen technology, XLK, XLY, some of those communication services, discretionary and technology names kind of lead us into this rally right now, is what we've seen for the SPY and the NASDAQ. But top tech investors Paul Meek is far from convinced, and he says, and I quote, I feel this way not really because I see the fundamentals for the bulk of these companies improving much in the near term, but more because it looks like investors are beginning to look past the near-term weakness in these businesses, and instead he's choosing to stay defensive and is looking for what he considers to be safer bets within the tech space. And when to go all in, he says all these companies should have less volatility and be a way for investors to play defensive tech until offensive tech comes back in favor. But when tech comes back, do I want to have AT&T or IBM, which is what he's right now in, more defensive tech? But he says no, because I want to play offensive once it's actually time. But he plans to wait a bit longer to reinvest aggressively into tech stocks. And before I'm all in, I need to feel more confident that analysts have lowered their estimates as far as the earnings go to reflect a recession. That's another thing that we haven't touched on recently, is that the estimates are still pretty aggressive for 2022, despite a lot of analysts projecting for a recession in 2022. Again, another headline, fund manager says the bear market rally won't last and reveals how to position for it. So hedge fund manager David Neuhauser says the market looks artificially high right now and are staging a bear market rally that will not last. And I think at this point in time, you're reaching to the upper bounds of this rally, and I would expect it to fade here in the coming weeks. and then pretty much how to position. He's heavily invested in commodities and particularly energy. So a little bit of more bullish, optimistic look on energy right now. And he, on the flip side, he's being negative on tech stocks for the past 2 years, and that's obviously been the correct call so far. So that's going to be that. And then going over some upgrades and downgrades here. Yeah, so Brandon says when fund manager says sell the rally, it's time to go all in. That's definitely been the case for the better half of the last couple of years here. But going over some upgrades and downgrades, so JP Morgan reiterates Peloton as overweight. Bernstein reiterates Apple as a market perform. JP Morgan downgrades Vroom to underweight here as well. BMO downgrades Dollar General to market perform from outperform. And Bard reiterates Amazon as outperform. Citi reiterates Disney as a buy. Increases its price target to 160 from 145 after the company's strong earnings report last week. And then Argus downgrades Southwest to hold from a buy. And Bank of America downgrades Solar Edge to neutral from a buy as well. And oil prices obviously selling off quite a bit after China's economic activity slowed across the board in July. And this was the article. So China growth slows across all fronts in July, prompting unexpected rate cut. And on one stark sign in China's economic malaise was 1 in 5 Chinese youth. So when you look at the unemployment rate within Chinese youth, almost 20% were unemployed in July. And Monday's figures show the highest level since China started publishing this data in 2018. And the People's Bank of China cut its interest rates by 0.1 percentage point and then pumped the equivalent of $59.3 billion into the financial system to rev up lending and wider economic growth. And the unexpected move marked a small step towards more support for China's economy as well. So going over to a few different things, this is like a pyramid of equity returns. This was a very, very interesting chart that I was able to find. This is actually not super updated. This is from 2020, I believe. But what this shows us is the level of returns for the markets for the S&P 500 going back, I feel like as far as low 1900s, right? I think we're going back to as much as 1800s for the last 200 years. So below we chart the total annual returns of U.S. stocks for over almost 200 years. And what you'll notice is that it's pretty much a bell curve in the equity returns. And what that means is that majority of the times, right, the S&P 500 has posted gains or pretty much returns of somewhere between negative 20 and positive 40%, right? Negative 20 and positive 40% has been kind of like the majority range within which S&P 500 has traded at in terms of annual returns every single year. And this is going back 200 years. So the other way to look at this is the probability of those outsized moves or those outliers for us to see more than 20%, annualized returns both on the downside and on the upside are very, very low. Right. So when we talk about, we've talked about Michael Burry and, what he's talked about, the mother of all crashes and a 70-80% drop coming in for the markets and what he's predicted and why he's short Apple stock. Those are very, very low probable outcomes to begin with. Right. It's just like playing a lottery or something. Right. The probability of that happening is really, really low. It's not impossible, but it's a really low probable outcome. So just a good visual representation of what that, bell curve kind of looks like. And, another way to say this was also that 87% of the times since the 1950s, the markets have traded within their 20% of their all-time highs, right? So remember that chart that I've already gone over, but this is just another visualization that I found, very, very appealing and good explanation of that as well. So this right here is another interesting chart posted by Nautilus Investment Research. Probably mispronouncing that name there, but they basically talked about a VIX trough cycle. And what this means is that basically mapped out the cycles every time the VIX has actually seen a rally. Again, just a cycle chart here. And the next trough they said was going to be today, August 15th, 2022. So last peak was actually back on July 11th, 2022. And every single blue arrow you see was kind of like that bottom of that cycle, or in other words, that trough for the volatility before it started to kind of push higher. And the average cycle period has been 50 days, right? So 50 days, meaning that within 50 days, it kind of goes up and then back down and gets ready for that next potential move up. Again, I'll take that with a grain of salt here. Obviously, every time we come down doesn't necessarily mean that it's going to see a big spike, because, I can already point out a couple times over here, where it didn't really move all that much, right? It didn't go up to these levels. So we'll take that with a grain of salt. Definitely here, just because the VIX is low doesn't necessarily mean that we're going to see another spike back up to 30, 35, 40 levels, but it's just something to remain cautious about, and obviously be alert, looking at the markets and talking about the risk reward dynamics. All right, so that pretty much wraps up our upgrades, downgrades presentation here. Everything that's going on in the markets. Oil prices are coming down. Bitcoin is almost testing 25,000 right now, just over 24,000, but it did get up to as much as 25,200. Ethereum just hovering around 1,900. So crypto's doing what crypto do best. They are kind of really volatile, back and forth here. Volatility is slightly higher, up almost 8%, and we are seeing a lot of individual stocks also pull back right now, with QQQs down 40 basis points, the SPY is down about 66 basis points, and the Dow down more than the NASDAQ because of oil prices and the impact of that on energy stocks as well. All right, so let's see here. So Dewey says you almost got through the news headlines without mentioning Burry. So no, I think he's been a little bit more active recently. I don't think he's been this active in a long time when it comes to Twitter. Most of the time he's very, very, inactive, or the account's pretty much dormant. But every time, he makes these wild predictions. I think it's interesting. I think it's worth taking note of, and I would do that for any other sort of like investor or trader. Obviously sharing perspective and having an idea of what other people are betting on, or what other people's perspectives are, really helps us kind of understand the overall consensus in the markets, right? So if Cathie Wood or Warren Buffett, or whether it's Bill Ackman or Chamath Palihapitiya or any other big known investor obviously makes these predictions, it's worth taking note of. Obviously, at the end of the day, we're all entitled to our own decisions. We have to make our own judgment based on the information that we have. But it's interesting, what the things that he's been saying. But Brandon says Burry is mad right now, punching the air. That kind of looks like it, because Apple obviously has done really, really well. I mean, if you take a look at Apple, 30% move, in the last few months here. So pretty significant rally, 33%, back up to almost $2.8 trillion market cap. By the way, let me know what you think about my recent video on Apple. Let me know what you think about Apple's valuation. And if you did get a chance to watch that video, let me know in the live chat or in the comments, what are your views on Apple as a company overall in terms of valuation? Because I think that's going to be a very, very interesting topic. And since Apple is so influential, over 7%, almost 8% weighting for S&P 500 is Apple now. That's a pretty big weighting, right? If you think about it, right? If you think about your own portfolio, right? If you've got a stock that has an 8% or 7% weighting in terms of allocation, that stock has a pretty big influence on the overall portfolio returns. And that's the situation right now with S&P 500. Right? It has over 505 companies, but Apple has over 7%, 8% weighting or influence over the overall index. So definitely, I think the difference has been that a lot of stocks have obviously, for the 505 stocks that are within the S&P 500, Apple has gone up 30%, but a lot of the other stocks have not really bounced back as aggressively as something like Apple, right? So market cap has grown for Apple over the last couple of months here rather quickly, versus something like an Etsy or like other S&P 500 companies that may not have gone up as much. So what was the X1 weighting when it was a big dog? I think it was closer to 4 or 5%. I could be wrong, but I think in the 1980s might have been that much, around those levels. So yeah, Ranjit says inviting for a single point of failure. Yeah, it's true. I think it becomes a little bit too concentrated on a few different names, right? I mean, I think Microsoft and Apple combined make up over 15% of the S&P 500. If you pile in Google and Nvidia and Tesla, those 5 names really are just going to have a bigger influence on the overall index. I think it's over 20% at that point, 20-25%, about a fifth or a fourth of the overall index will be now influenced by these larger cap names, as they've gone up so much. So yeah, that's where we are. I think Apple's valuation, I think it all comes down to the P multiple, right? I think if I ask you today if Apple's price earnings multiple on a forward basis, 27, 28 is justified, I think you're going to get a lot of mixed responses, right? You're going to get yes, no, don't know. I think that's going to be the response for Apple. I think that's what the market is also trying to understand, is whether Apple appropriately is valued at 27, 28 times forward earnings. Is that okay, or is that too high or too low? Based on the earnings growth, right? Earnings growth for Apple on a conservative basis, I think we can all agree that 10, 12% is reasonable for net income growth, but nothing more than that. I don't think Apple can do 20% or 25% earnings growth over the next 5 years, 10 years, unless they've got other verticals that they're dealing with, whether it's an Apple car. Even then, I think manufacturing and margins on the Apple car are going to be not as great as their services business or their iPhone business or any other verticals that they can pull on, which are going to expand their margins further. But other than that, I think the growth is really going to be questionable moving forward for Apple. We'll see. All right, so cool. Caddy, thoughts on going long in SQQQs? So it is a trade idea. I would definitely agree that it is worth a trade idea. But if you are thinking about a long position on QQQs, I would definitely be watching some levels on the. If you're thinking about taking a long position on SQQQs, I would definitely be watching some levels on the QQQs, right? So this is my 5-minute chart on QQQs, right? That's the Nasdaq ETF. If we do get a break below 328, that would be a reasonable breakdown of his support. Then I would be looking at even pre-market support here, over here, right here. So that's going to 328.50, call it that right there. Those are going to be two levels to watch. If you do get a breakdown for the Nasdaq ETF below this level, then yes, I think there's some possibility to trade on the inverse on the SQQQs, but you got to have your tight stops in place, because with leverage ETFs, you got to be very careful with your risk management and make sure that you have your right appropriate position sizing. And when it comes to your stops, have a mental stop loss if QQQ breaks the high of day or Friday's close. Then I think that's going to be a very intraday bullish move. Then that's going to be the stop loss for SQQQs. So it is worth an idea. Definitely, I agree. I think if you do see a breakdown, given how overbought we are for individual stocks, we talked about Amazon, Tesla, Apple, a lot of them, the RSI, just very overbought conditions. So I think it is worth an opportunity there. All right, so yes, I'll do a video on applied materials. So over the weekend, I did videos on Lemonade, I did videos on DraftKings, did a video on Apple here, I did videos on maybe one more stock, I can't remember, but and then moving forward, I will be doing a video on Semiconductor. This is a stock that's been doing really well. So this is on my watch list for doing an updated analysis on them very soon. And then I will add applied materials to this as well. So AMAT, I'll add that one. And then some other stocks that I know that people want analysis and updates on, I will continue to kind of add those over here. So once the earnings season is now starting to kind of wind down, we don't have a lot of economic data to deal with. So we'll kind of bring up those individual stock analysis and videos once again. All right, so have I missed the Tesla talk? Michael, no, we're just getting started with Tesla talk right now. We just got done with Apple, but Tesla right now up another 0.5% to 904, almost $905 per share right now. So very, very strong move for Tesla as well. And the next resistance, we're really paying attention to is going to be 943, 950s. We do have the 200 SMA for Tesla roughly in the 910s. So 909 is going to be that 200 SMA. And all the way up to 943 is going to be that resistance right now for Tesla. So that is going to be that level to watch. And Nick says, yeah, at this level, Apple is highly overbought. I mean, if you take a look at the RSI, the MACD for a lot of stocks here, it's just crazy, right? It's pretty scary, to be honest, where we are with the RSI at 74. 74. It's really scary to look at some of these, RSI and MACD levels from a technical standpoint. Tesla did pull back a little bit, but obviously, it got up to as much as 75, so it did pull back slightly. Now it's trading at 61, so not as crazy or scary as Apple, but still pretty elevated right now as well. All right, so oh, you said Tesla? Yep, Tesla. We're just getting started. Brandon says Tesla's fair value 1,800. Yeah, that's the community fair value, right? That's the intrinsic value based on the overall community that we calculated, right? Based on that live stream. I think that was just based on everybody's collective minds working together. But of course, if you ask individual people, then it's gonna be wildly different than that 1800. People are gonna be lower, higher, right at 1800, so it's gonna be all over the place. All right, so make sure that you do vote if you haven't already. So we've got 60% expecting the markets to be red today, 29% expecting the markets to be green, and 13% expecting the markets to be flat. So a little bit of majority there for potentially a red day. So we'll see, how the markets trade today. Volatility is a little bit higher, so we're almost up 8% right now. And of course, markets are pulling back slightly. QQQs, we're paying attention to 328 on the 5-minute. So those right there are going to be some levels to watch on the QQQs. Right here, 328.50, 328 around those levels. We're getting a little bit of a bounce back from pre-market levels here. Resistance stays at 330, so that's going to be our $5 range to watch for QQQs. Richard says that's the fair value 18,000. Okay, now it's getting a little crazy. 18,000 would just be like 200x, right? So 20x, literally 20x. Tesla would need to go up just for it to be a fair value. So from like a 1 trillion, it would need to be a $20 trillion company. Tesla need to be. 20 trillion market cap, not bad. Just a guess, where do you think Tesla will end at end of split day? So, oh Michael, man, why do you gotta touch that nerve? Come on. That is such a delicate topic right now among all. Yeah, I don't want to get into that because I'm gonna probably cry in this live stream. You guys don't want to see that. But all right, let's just talk about Tesla here. So Tesla on a split adjusted basis, I think usually when splits are coming up, we usually do see a pretty big rally. We do see a lot of optimism, a lot of momentum for that stock, even though fundamentally nothing really changes. The market cap's going to stay the same. They're just going to increase the shares outstanding, reduce the price. So wouldn't be surprised if you do continue to see some momentum carry forward as the split date comes closer. So 945, 950 is going to be that resistance that I'm really paying attention to right now to see if we actually get that breakout. And once we do, then the next technical resistance is going to be around here. So that's going to be that lower high. 3 touch points we already got starting from November 1st, twice, 3 times, and that's going to be that 4th touch point roughly in the 1050 to 1075 levels for Tesla. Yeah, QQQ 325 is going to be a very, very interesting support level to watch right here. 325, 328 right now. And then, of course, 325 all the way down here, which is not going to be a crazy move. I think it's going to be a little bit over 1%, so 1.27% for 325. And the resistance is going to stay put at 330s for QQQs. All right, so let's just switch over to the indices here. And we'll open up our 4 split screens as well to see how individual stocks are doing. We'll talk about advanced micro devices and NVIDIA as well. In fact, we already have that open. Okay, so I'm just going to close that out. All right, so Apple down 0.5%, AMD slightly down about 70 basis points. Tesla we already talked about, just over $906 here, and Meta is slightly down about 83 basis points right now, just under 180. Dio says, hey Caddy, do you have Tesla FOMO? Not quite, not at all. No. I do have Netflix FOMO though. So check the 4-hour charts. Ranjit, for which stock or which ticker are you referring to for the 4-hour chart? All right, we're gonna end the poll now. 264 votes. I feel like we can do better, at least get up to 300 votes, but still 58% majority people expecting the markets to be red today, and then of course 30%, a third of you expecting the markets to be green. So there we go. And if there's any new polls that might interest all of you, we can definitely start those as well. Yeah, a couple things. Oil definitely showing some weakness here, down over 5%, $87 a barrel. That's a good thing. That's, you know, exactly what we want. Now, so far for the month of August, oil is down. Crude oil is down over 11%. 11%. We're actually hitting a new low of month, down to $87 a barrel. So very good thing, very good sign. That's exactly what we want, and we want to see continue as time goes on. And then volatility is also higher here a little bit, almost 8% in the green, pushing up to 21 levels. So JP Morgan, yes, I'll do a video on JP Morgan so you can see that make videos on. I have JP Morgan right here. We'll be doing a video on them very soon. In fact, banking right now, financials are showing some improving signs, momentum-wise and technically speaking. They are showing signs of momentum gaining, and as a result, they are improving in that quadrant, in that relative rotation graph that I showed you guys. Financials are ones that are showing some strength here. So I will do a video on banking in general, and then specifically touching on JP Morgan very soon. So I'll do a video on them very, very soon here. So, all right, let's just quickly go over a couple minutes left here. Let's just talk a little bit about NVIDIA and AMD as well. So on the daily chart, NVIDIA here didn't quite come down to lows of 150s. It actually came down to 167. The RSI and the MACD, once again, not quite overbought. The MACD did cross below the signal line, but RSI is pretty much a neutral range right now, 58. Resistance is going to stay put at 195. So this right here, very strong resistance to watch on NVIDIA. We'll see if you actually do get that breakout. Got like a double top here, almost at 195, a little bit lower than as well, at close to 192. So 192, 195, that's going to be that resistance for NVIDIA to see if you get that breakout. And AMD, we've got a couple of supports here. $103 is going to be the more recent one, $103, $104, all the way up to 109 is going to be that next resistance. So yeah, those are going to be the two resistance levels, still trading below 200 SMA, and right now getting validated at $93, $94. And AMD also got really overbought, saw a little bit of a pullback in the RSI. MACD still trading above that signal line, so we'll see if you actually do get that cross below that signal line as well for advanced micro devices. All right, let's get ready for market open. We got 30 seconds left, everybody. Not a lot of stuff coming out this week. We've only got two economic reports that I'm focusing on: retail sales and the Fed meeting minutes that come out on Wednesday. And then other than that, we've only got earnings to focus on for retail sector: Walmart, Home Depot, Lowe's, BJ's, TJX, all those companies reporting. So Chente, I do expect a little bit of a pullback in overall real estate prices and home prices. I wouldn't necessarily call this like a housing market crash or anything, but I do expect a pullback in overall prices because mortgage rates are going higher. It's also a little bit of a lagging indicator. Real estate prices will take time to be affected in that regard. So I do expect a pullback, but not necessarily like a full-blown crash or anything like that. All right, so off we go. NASDAQ here down 39 basis points, just trading under 13,000 at the moment. We got the Dow Jones here down about 0.5%, and the S&P 500 just down about 0.5% as well. Looking at individual stocks, AMD flat, almost positive. Tesla up to $908. So we are up over 1% right now for Tesla. Meta Platforms only down about 0.5%, and Apple flat on the day so far. 171, 172 is where we are right now. All right, so here we go. Volatility coming down slightly, still up 7%, but under 21. Oil prices still lower, 5%. Ethereum just hovering around 1900. Bitcoin just hovering around 24,000. Some of the crypto-related stocks, they've done incredibly well. I mean, they've gone up 100, 200%. Marathon's down 1%, 1.3% at roughly $18. Coinbase down to now under $90, and then we've got Riot just up a little, just under $10 right now, up over 0.28%. Dogecoin, look at that. Actually, Dogecoin is not up, 6% down here. This is the inverse Doge bear. ETF that's up like 19% right now. So this is where we are, $330. Look at that. We're getting that test here, 330. That's the high from pre-market. So if you come over to the 1 minute chart here, we got a couple tests here. And then of course, on Friday as well, we were kind of battling through at that $330 level. So that's exactly where we are right now. Quick, rejection or breakout? What does everybody think in the chat? Just let me know. 330, are we going to see a rejection here, or are we actually going to see a breakout for QQQs at $330? This is the 1 minute chart, by the way. High for the day, 330.37. So we got up to that level, a little bit of rejection there. We're possibly getting up to another retest here on the 3rd minute candle, but let me know in the live chat, rejection or breakout. So few people rejection, breakout, rejection, breakout, rejection. Literally, it's like one after another. It's like rejection, breakout, rejection, breakout. So I would say it's like 50-50, right? There we go. Starting to push up to 330.54. But again, it depends on where the candles close, right? It depends on where the candle ends up closing. Friday's high was actually up to as much as 330.69. So NASDAQ now is almost positive, only down 7 basis points. We've got the S&P still down. Dow is also selling off because of energy. So if you come over to the energy watch list, I'm sure they're down like 4 or 5% today. There we go, all red. It's pretty bloody over here. Occidental's down 3%. BP, Shell, Devon Energy, Exxon Mobil, Chevron. Everything is just selling off pretty aggressively, with crude oil and Brent selling off pretty aggressively as well. And then banks. Banks also pulling back, with PayPal, SoFi, Square, green. So those are mostly fintech, but some of the more traditional banks like Deutsche Bank, Wells Fargo, UBS, Barclays, Citigroup, Credit Suisse, all them down 1 to 2%. Let's take a look at Chinese stocks, and we've got Li Auto down 4.7%. So they were reporting earnings today, right? Let me see if I can go back here. Li Auto, yep. So they were reporting earnings. So they actually did report earnings. Right now down almost 5%. We'll take a look at their earnings here shortly. But XPeng, Alibaba is also down. NIO is slightly down, just a little bit over $21. So just under 1% down here. So far, first 5 minutes, we're getting a very strong move here on the NASDAQ, on the QQQs. Look at that green candle, just like absolutely getting popped. 47 basis points, like almost 0.5% move in the first 5 minutes here. Tesla to $920, that's incredible. Very, very strong. Look at that, $920, up 2%. AMD's up over 0.5% right now, so very strong move as well. Apple is up to $171, and then Meta Platforms also up to $180 right now. So very, very strong move coming in. So FANG Mint, this entire watch list, only Apple and Microsoft are slightly down, pretty much break even, not even down. And then we got Tesla, the big leader, up almost 2%. Nvidia's up 1.3, Netflix, AMD, Google are all up anywhere between 25 basis points to as much as 1%. And Meta's also up 30 basis points. So Zim reports earnings later this week. They are down roughly 4.8% today. AMC's pulling back. Unity Software, GME, John Deere, Caterpillar, some of the construction names are also down here. Then we've got Marathon we talked about. Alibaba we talked about. Tattooed Chef is slightly down. I looked at Tattooed Chef here somewhere. Yeah, right here. Down 1.4% at the moment. Then we've got NIO we touched on. Let's see what's actually green. So Plug Power has been absolutely killing it. If you take a look at PLUG on the daily chart, this stock's just been going crazy. Absolutely parabolic. It's gone from like $14, $15, 120%, right? $30, $31. Pretty crazy move for Plug Power. Gente, you said Tesla the leader. Yeah, right now so far for Fang Man stocks that we look at, Tesla definitely leading the way, up over 1.9%, almost 2% at the moment. So definitely pushing higher quite a bit. And then yeah, Snapchat 3.2%. We got Fubo pushing up to 3.10. Pinterest, Trade Desk, Alta, APPS, Palantir is back over $10. So that's something. And then LABU is up to 1255, so 0.72%. XBI is still trading inside this consolidation pattern, right? Still a lot of consolidation here. So Justin, I'm green on Tesla. Should I take profits considering the RSI is overbought, but I plan to hold it long term though? How do you decide when to take profits on your long positions? So I actually did a video on Patreon talking about 4 times when I would be selling a stock. So literally the title of the video is when to sell a stock, right? So we go over 4 scenarios when exactly you would be considering selling a stock, right? So make sure that you watch that video if you haven't already. But if you mentioned that you are a long-term investor, it doesn't really matter where the technicals are or the day-to-day fluctuations are for long-term investors. What does matter though is your percentage allocation, right? And that's exactly what we talked about in that private video. So if you get a chance, watch that video. It's really, really helpful. Literally goes over, everything you need to know. Whenever you're making that decision, should I sell the stock or not? That video will answer that question for you, right? So if you just watch it, that should be very helpful. And 4 scenarios that you can kind of look at when you're thinking about locking in profits or selling any stock. So, Caddy, do you have any specific stocks, small caps, or up and coming? Not anything at the top of my mind right now. Still doing a lot of research. We have looked at a lot of different prospects of companies that are part of our spreadsheet that we're just waiting on for come down to intrinsic value. If they do, great, we'll buy them. Otherwise, just on the lookout for new and other opportunities. So yeah, I mean that's how we kind of source stocks. Is just like obviously we've got this community that we have. Why not use it to our advantage, right? So everybody's obviously an expert in something, and we can all share our ideas and bring up with some stocks and trades and whatnot. And then we can look into that company in more detail, look at the fundamentals, look at the valuations, look at the earnings growth, look at the history of the chart, and then try to make an assessment based on our 16 check marks and our fair value calculator to see whether it's worth investing in or not. So that's the thing, right? So there's over 8,000 stocks in the markets. It becomes really challenging to source all of them, let alone looking at all of them on a more fundamental basis. So but yeah, not anything at the top of my head right now, but definitely on the lookout for more and more companies all the time. So okay. Yeah, Tesla run till the split here. So Tesla up to 915 right now. So definitely a very strong momentum coming in. Still pushing up 1.7%. Apple is now break even, so 172. So definitely not really green, but not really down either. Strong momentum intraday. And then AMD also green 20.22% here. So yes, we forgot about our old friend lag. That's true. See, it's gotten so better that we've completely forgotten about it, right? It's like old news now. It's past news. So that's great. That's great. That's very, very good. All right, so now we do have on the Fang Man's list, we do have a little bit more stocks that are turning red here. So earlier we only had 2. Now we have 6 out of the 9 that we're tracking here, like based on a larger cap tech names. And if you go back to QQQs on the 5-minute, we're back under 330 now. So we did get a little bit of a breakout, but now we're starting to see a little bit of selling pressure here once again. We did get up to as much as 331. High for the day, 331.15. Yes, Kevin says rolling over. So yeah, we're starting to see a little bit of a pullback here once again intraday. Again, we'll see what happens over the course of the next 6 hours, but But yeah, 328 is going to be that support all the way down to 320.50, all the way down to 328. And of course, we've got some bulls sitting us down at 325 right now. So Fed meeting September 21st. No inflation data left, at least not for this month. And that's it. NVIDIA reports earnings, I think, at the end of this month. So, man, it's going to get really boring from an economic standpoint. There's not going to be a lot of stuff coming out. Not from an earnings. Earnings season's over. It always gets boring when earnings season's not going on. It's like, what do we look at for individual stocks? All right, so oil. Let's talk about oil. How many of you actually think we're going sub $80 a barrel for energy? I think it's possible. I think that's going to be that next touch point for the lower lows inside this downtrending channel. I mean, so far, this oil chart in the downtrend has literally worked out so well. Like 1, 2, 3, 4, 5, 6 touch points on the lower highs. And then 1, 2, 3, 4, 5th would be the lower lows over here. So sub $80 is something that would be very good for overall energy prices. So 79.75 is going to be that level right there at the lower lows. And yeah, winter, I know that there's a lot of people expecting a big run up ahead of winter because, winter is coming. So we'll see if the demand kind of increases substantially for energy and if it takes it back higher to over $90 to $100 a barrel. So gas in Georgia, 320. Yeah, gas prices have come down pretty dramatically. That's a good thing, right? So that's definitely good. The gas prices have come down pretty substantially over the last couple months here. So 330 rejection getting a little bit here. That's going to be the level. Right now, so far, just flat. Tesla's giving up on some of the gains. 1.5%, still green, still pushing through, but very, very flat kind of day for the markets. Yeah. Midterm elections also coming up in November. So that is going to be important for the markets very much so. This is also a chart that is interesting because right now these stocks collectively are just consolidating, a lot of them. These are companies like Meta, Apple, Amazon, Netflix, Google, Microsoft, Tesla, Nvidia, all the large cap that represent 20, 30, 40% of the overall market, which is the Nasdaq or the S&P. Which are mostly consolidating sideways now. So Dow getting a little bit of recovery now. And the Nasdaq is now underperforming the Dow intraday. Interesting. So let's see where the interest rate expectations are. Based on the Fed Watch tool here. Srenji says Q is 327 today. Yeah, we're getting a lot of rejection at 330. At 320, at least a 320 retest, I wouldn't be surprised if you get one. So 327 would mean another, like a drop of about 1% from current levels. But 320, I think, is very likely possibility as well, I think. We're getting a lot of rejection now, 330s. All right, so yeah, 63%. Kevin said 50 basis points looking more likely now. Yep, so 63% more. 2/3 probability for the Fed funds futures now, expecting the Fed to raise rates by 50 basis points, and then only 36%, about a third, expecting the Fed to raise rates by 75 basis points. So This obviously changed after the very strong inflation numbers came out. We'll get some more fluctuations after the August employment report that's going to be coming out in September, and then the inflation numbers for the month of August that also come out in September, and then of course some GDP numbers as well. If GDP numbers continue to get revised down, if you get a negative number, then recession probabilities are going to push this probability over to 50, possibly even 25, even more. So Alex, do you think the stocks will more or less consolidate sideways until October, unless something catastrophic thing happen in the U.S. or in the world? Yes, I think consolidation is a very likely probability as well. A lot of it also depends on where the earnings estimates go from here for the third and the fourth quarter. Because at the end of the day, that's what it all comes down to, right? All of it depends on where the earnings are for the S&P 500 companies as a whole, and what is that P multiple where the S&P 500 is going to be valued at. So if over the next couple months, if there's any recession fears that get elevated because of the Federal Reserve's interest rate hikes, because right now I think the big topic of discussion is, will the Fed push us into a recession? Even if we are not in right now, whatever that definition is according to them, even if the US is not in a recession, will the Fed actually push the US into a recession, right? And if they do, then what happens to unemployment? If unemployment starts to go up, what happens to earnings? They come down, they get revised down, and as a result, that leads to more volatility and potentially a lower move for the markets. So, based on those things, I think a lot of it obviously depends on where interest rates go, where inflation goes. So we're kind of coming back to the source, right? The source of the problem is inflation, is oil, right? So this is literally us going to the source and trying to understand that, okay, if oil prices come down, inflation comes down, Federal Reserve's expectation of interest rates come down, and the economy continues to be on a strong footing. But if the Fed becomes more aggressive, as they've told us that they're going to be very data dependent, they're going to focus on inflation numbers, then obviously things can get worse. Yes, FOMC minutes coming out on Wednesday. That is going to be important. So look at 330 rejection here. So on the 1 minute chart, we're just like fighting that level so well. We're just not able to successfully break past 330, 34. Like we're still above 330, but we're not able to kind of break out over that level here. So Caddy is 10% cash in this high VIX, a good ratio. And thoughts on XBI? Sorry, joined late. So it really depends on your level of confidence in the markets, right? So cash exposure, obviously, I can't comment on a more person-to-person basis. I can tell you what personally I'm sitting on in terms of cash exposure, but it really depends on person-to-person, your expectations of a pullback or the risk-reward dynamics that you see in the markets. If they're not favorable, then for you it might be a little bit of a higher cash exposure. But versus somebody who doesn't necessarily see a pullback or believes that the risk reward is favorable in their situation, they might have a lower cash exposure. They want to be invested. So it really depends on person to person. I'm currently sitting on about 13.5% to 14%, but I want to get up to at least 15% by the end of this month, possibly even higher as time goes on, as if markets continue to trade sideways or if they continue to push higher. But talking about XBI, I've done a video over the weekend as well on that. $112 is where the price would be if XBI were to turn this year positive. And we talked about how over the last 14 years since 2006, we've never seen 2 consecutive years of negative for biotech. M&A activity has picked up quite a bit for small caps. So as a result, they've seen a pretty significant rally. I mean, from June lows to where we are right now, they've gone up 50%. So very significant gain for smaller cap biotech, and levels that I'm watching really closely are $97 all the way up to 115, 116 levels. All right, so looks like QQQ going up for another potential breakout here. But look at the wicks here. It's pretty crazy, the amount of volatility here. All right, ALO. Let's see what this stock is. By the way, pretty crazy price action over here, isn't it? Like, look at the amount of volatility here. By the way, I've got 5-second charts here as well, I think. Nope, I used to have them. I don't have them anymore. All right, 1 minute chart. But yeah, pretty crazy volatility here. Look at where we were. We got up to 330. This can easily fake anybody out. Like, this can easily. If you just go on that breakout, on that wick, man, there might be so many people getting caught up on that wick here, on this fake breakout. Huh. All right, let's take a look at OLO here. All right, so what is this stock? All right, technology services. Let's see. All right, consistent growth in revenue, not profitable. Quarter over quarter, also strong growth there. Market cap sitting at 1.3 billion. Okay, down 58% year to date. But again, what isn't? Let's see. Shares outstanding, pretty stable here. 141, 144 to 157, not bad. Let's take a look at their balance sheet here. All right, so they got practically no debt and tons of cash on the balance sheet. So pretty much negative net debt. That's good. And let's just go over to statistics here. Trading at 12.5 times sales. I'm assuming cash flow is really, really low. That's why their price of cash flow is sitting at over 2,000. Enterprise value to EBITDA negative, so they have negative EBITDA. Gross margins are at 68%. That's good, almost 69%. But they're not. Operating margins are negative 25%. So okay, if you look at those two numbers right there, if you look at gross margins, which is at 69%, and operating margin is negative 25%, what is the one thing that immediately comes to your mind? What is the one thing that immediately comes to your mind that should be pretty obvious looking at these two numbers here? If the gross margin for the company is 69%, but they've got operating margins at negative 25%. Quick, pop quiz. Another pop quiz for everybody. So what is the one thing that immediately comes to mind? Yes, so Kevin says too much spending. That's true. Operating expenses are pretty high, right? Very, very high operating expenses, because if they can retain 68% of their revenue as a gross profit, and then they go from 68% profit all the way down to negative 25%, meaning that their middle, which is their operating expenses, their R&D, SG&A, general administrative expenses, sales and marketing, all those things, stock-based comp, everything is they're spending too much on that. And that's okay, because I feel like this is a very, very startup-oriented new company that wants to spend a lot of money on that. So I'll take a look at this company in more detail in my free time. Right now at 4.7%, so very, very strong move. Very nice move to the upside, but we'll definitely take a look. All right, look at that. QQQ now at 25%, pushing higher very, very nicely. So 36 basis points after lots of rejection here. The bulls are starting to regain control very, very nicely. NASDAQ back over 13,000 here. And we got the S&P 4275, and the Dow Jones is now coming back to break even. AMD is up 77 basis points. Apple is flat. Meta is up 35 basis points, and Tesla is up 2%. So back in very much green territory, up 2% right now. Some bear just lost thousands on that candle. Yeah, that was a pretty freaky candle. With so much rejection there. And then immediately came back down, consolidated sideways, and boom, all the way back up. Li Auto, let's take a look how they did on earnings here. Let's see. So, okay, 4 days ago, so this again is not updated. Man, TradingView needs to do a better job in updating some of these articles. They are not up to date. All right, so now in our Fang Mant, only 2 stocks are red again. So we only have Apple and Amazon that are only down, pretty much break even, and everything else is up 2%, 1.3%, 85 basis points, very, very nicely up. Netflix up to 250. 250, up another 45 basis points. I don't know if you guys can tell, but my voice must be breaking because of Netflix's missed opportunity. I'm like really, really, pissed about that one. So Lemonade, AMC, Peloton, Unity Software, slightly down, and then Moderna, Snapchat, Coin still pushing higher. So are any of the crypto stocks pushing up here? All right, so only Coinbase is up almost 3%. Mara down close to 2%. Riot is also pretty much break even, only down about 60 basis points. Cybersecurity, so we've got CrowdStrike and Zscaler slightly down. Okta pushing up to 106. Man, Okta 106 is pretty wild. So yeah, it was at $77 a few weeks ago, and then getting up to 106 right now. It's 35% gain there. Murray needs a hug. Yeah, I mean, some of the tweets you can just feel how pissed he is. Yeah. But yeah, we'll see. I mean, you can never in the markets. That's the thing, right? It's all about the time frame. It's all about the time frame, literally. Like you can be right or wrong in a different time frame, and then be right or wrong in a different time frame, right? So, for example, if you look at Cathie Wood, right, ARK Invest, and last year, if you go back, she was the god of investing, right? Everybody kind of literally just hailed Cathie Wood, right? And literally 12 months later, or I should say like 18 months later, it's just tables have turned so much. It's just completely different attitude towards ARK and Cathie Wood, right? It's just completely different. And who knows? You know, maybe 5 years from now, it's going to be completely different again. You know, it's going to flip over once again. So that's the thing, you know, with investing, it's like you can just never rule anybody out. Unless, of course, they've got plenty of time. So Linky says, I haven't watched The Big Short. Is it good? It's really, really good. Definitely watch The Big Short. This is an incredible movie, you know, just encompassing everything that happened back in 07, 08, pretty much following 4 different parties and how they, you know, benefited. I don't want to give away the movie, so I don't want to spoil it for you, but definitely, if you're interested in learning about what happened, you know, during the great financial crisis of 07, 08, highly recommended. Highly recommend. It's like a must watch for anybody who's investing in the markets or like trading actively. It's like a must watch. And then another one is The Margin Call. Very similar, but a little bit different. Focuses more on the banking side, investment banking side, and the risks of lending and credit. So Margin Call is also really, really good. Lots of great actors in that movie as well. Yeah, those are the 2 big ones that kind of go over what took place. Jasper, no, I don't own any crypto. Brandon says Margin Call was kind of boring. Really? I liked it. I liked the movie. I think it was a little bit more nerdy, I should call it. Like it was a little bit more went into the technicality of things, as opposed to, you know, what kind of going over the whole situation. But I liked it. I liked both of them. Big Short, obviously, much more than Margin Call. But so Jasper, no, I'm not in crypto right now. The Inside Job, I haven't looked. I haven't watched that one. Definitely something that we can pay attention. I can probably watch as well in the future. All right, everyone. So anyways, that is going to be it from me. So hope you all enjoyed this live stream. A little bit slow start to the week because we don't have a lot of things to focus on. Earnings are done for the most part. Economic data, there's only 2 things, retail sales and the Fed meeting minutes coming out on Wednesday. Both things are coming out on Wednesday. Oil prices are coming down. That's a good thing. Volatility is slightly higher, so be on the lookout for that. But so far, market seems to be pushing up. Intraday, we are seeing a lot of buying pressure come back in. So keep a close eye on a few things: oil, volatility, and of course the QQQs. Levels I'm watching is going to be 330. Now is going to be a new support, all the way down to 328, down to 327. As Ranjit pointed out, and then 325 is also going to be a level to watch as a support. So those right there are going to be some supports and of course resistance levels. Hope you all enjoyed. Oh, Too Big to Fail. I forgot about that one. Yes, Caesar, man, thank you for pointing that out. Too Big to Fail, another phenomenal movie. Goes more on the Federal Reserve side, right? So all 3 movies pretty much focus on different vantage points. So I think The Margin Call is more on the banking side, and then The Big Short is more on 4 different parties that benefited from the crash. And then, of course, Too Big to Fail focuses more on the Federal Reserve and what they did with the banking industry. So yes. So thank you so much for joining, everybody. Gente, love that comment. I appreciate that very much. Make sure that you drop a like, subscribe if you're new to the channel, and also check out the Patreon link down in the description below to join our Patreon and, of course, our Discord channel to get access to all the buy and sell alerts, trade ideas, options alerts, and all that stuff. So as always, have a great day, and I'll see you all in the next live stream.